Hello everyone, I welcome you back to our channel The L&D Show. Let us take this opportunity to wish you all a very happy Diwali and a new prosperous year. We are celebrating Festival of Lights and I'm sure every one of us aspire to brighten our future, isn't it? In the pursuit of this certainty, one needs some sense of guarantees, especially towards those needs which are non-negotiable in nature, such as your retirement, your child's education and their marriage. Our team has brought to you one of the most beautiful and efficient solutions to address this problem in the form of ICICI Prudential Assured Saving Insurance Plan, famously known as ASIP. This is an endowment plan which addresses both the needs of investment and an insurance option. If I tell you that your returns are 100% guaranteed, will you be interested towards this plan? Not really. There are many of such kind of plan. What if I tell you that it beats the return of corresponding recurring deposits and fixed deposit? Will you be interested? Still need some conviction. Lastly, if I tell you that your investments as well as your maturity benefits are completely tax-free, then I'm sure you would like to explore it, isn't it? Friends, this plan offers two types of benefits. First, guaranteed maturity benefit. This is dependent on one's age, gender, policy term and premium payment term. Second is guaranteed addition, which is completely dependent on policy term and it acts as an incentive to stay invested for a longer tenure. Though this plan offers three combinations of premium payment term and a policy term, which includes first option of pay for 5 years and enjoy the maturity benefit at the end of 10th year. Second, pay for 5 years and enjoy the maturity benefit at the end of 15th year. And third, pay for 7 years and enjoy the maturity benefit at the end of 15th year. We personally recommend you only option 2 and 3. In these options, one will enjoy guaranteed additions at the rate of 10% on total premium paid till date. These benefits will be over and above guaranteed maturity benefit, which leads to overall return of 2x on total premium paid for an individual aged 40 years and around 1.8x for an individual aged 50 years. Need not to say, at a younger age, if these investments are made, returns will be exponentially higher. Beauty of this plan isn't over yet. In case of unfortunate demise of policyholder, this plan offers death benefit at an increasing rate. That means death benefit, which comprises of sum assured, which is nothing but 10x of annualized premium, and accrued guaranteed additions, which gets accumulated year after year. To summarize, our team has done a comparative analysis whereby we have benchmarked ICICI Prudential's ASIP plan's return against that of returns from recurring deposit during the premium payment term and rate of fixed deposit post completion of PPT till the end of policy term to get you apple to apple comparison. Let us understand the computation for each recommended option. For first option, whereby one is likely to invest for first 5 years and stay invested till the end of 15th year to get the maturity benefit. Assume there is an individual who is aged at 40 years, falls in the tax bracket of 30%, who likely to invest 10,000 every month. Instead of ASIP, he opted to do that in recurring deposit. With a current recurring deposit rate, his sum would have grown to a level of 7,14,000 in first 5 years, which subsequently would have got passed on to fixed deposit and kept invested for next 10 years to reach a summation of 14 lakh rupees. However, friends, we would like to draw your attention that returns from recurring deposit and fixed deposits are taxable at the rate of applicable tax slabs. Thus, the resultant summation in the hands of investors would not be more than rupees 9,75,000. If the similar sum of 10,000 each month would have got invested into a ASIP, same individual would have generated a wealth worth 11,80,000 rupees, which is 2 lakh more than that of recurring deposit and a fixed deposit sum. Let us explore the computation for option 2, whereby one is supposed to make the investment for first 7 years and stay invested for 15 years. In that case, if one would have invested in a recurring deposit at a current rate for first 7 years, the 10,000 rupees amount investments per month would have grown to a level of 10,80,000 at the end of 7th year. After passage of this summation to a fixed deposit bucket, this sum would have grown to a level of 18 lakhs till the end of 15th year. If we apply a tax treatment, then an investor would not be left with a sum of around 14.5 lakh in his hand post tax treatment. Instead of recurring deposit and a fixed deposit combination, if one would have invested the similar summation in ICICI Prudential's AC plan, then he would have generated a wealth worth 16 lakh rupees. This is a resultant 2 lakh incremental wealth. So friends, last but not the least, ICICI Prudential AC plan is not a replacement to aggressive asset class investments like equities and a mutual fund. However, when it comes to a provisioning against some non-negotiable needs, AC offers one of the best in class solution, and thus our recommendation is to consider this plan to address your non-negotiable needs. Lastly, we would like to thank you for your time and request you to subscribe to our channel if you would have not done this earlier to get updates on such interesting topics on a regular basis. Thank you very much, and once again wish you a very happy Diwali.